You know, one of the great things about doing the Dave Nemo show with Dave Nemo is I get to say good morning to Dave Nemo and welcome him to his own show. So good morning to Dave Nemo and welcome to your own show, Dave Nemo.
Well, thank you very much. And, when you guys are around here, I get to do something that I never get to do and I would never do. I never listen to my old shows. I can't stand the sound of my own voice. But I get to listen to you guys, and I learn a lot, that's for sure. That's what that notebook is for. And the Trucker CFO, his own self, is going to be joining us here right now, Colton Lawrence. Colton, good morning.
He's back and better than ever.
Hey, Colton, good morning.
Good morning. I love that soundbite in the back there. That was awesome. Dave, thanks for the intro. It was great to be here.
Oh, fantastic, yeah.
Colton, you had a great line. Dave, really quickly, I want Colton to share his line because now you get to tell people. Well, I want you to get the full credit for your line. People come to see you now and tell them what you get to say.
Yeah, so, the tax season, the deadlines anyway have passed. We've got extension deadlines and whatnot, but I tell people at this point, your procrastination is no longer my emergency. So we will get the work done, but, we're not going to be doing 80, 90-hour weeks to get things done at this point.
And that's why he's better than ever. That's why he's back and better than ever.
Number 392. Please come to the counter. Yeah.
By the way, I don't know if you saw this, Dave, but Colton knows all about this. So the House of Representatives passed themselves a big old tax bill. Ta-da! Yay! Hooray! It gets over to the Senate, and they basically said, dead on arrival. Dead on arrival. Back to work. Everybody's back to work. Let's talk a little bit about this bill, shall we?
Yeah, let's do the big, beautiful bill. I don't know I've ever seen a beautiful bill. I don't think that's the right adjective, but hey, it is what it is.
Colton, every single tax bill when it comes through, these bills that actually fund the government when they come through, as complex as they can be, and there's a reason why they're written so long. There's always a way that they can be summed up at kind of a core level. If I was going to throw that question to you, while also taking time and asking the question to buy you time to come up with an answer, if you were going to give a summation to what this bill does and what it doesn't do, is there a single sentence or a single paragraph to kind of explain its core function?
Yeah, I would just summarize it by saying it extends, maybe not even extends, it codifies, so makes permanent a lot of the portions of the prior 2017 Trump tax cuts. It makes them permanent. So that's a big part of this bill. So things like the tax brackets, some of the bonus depreciation rules that had already started to expire. A lot of that stuff is now made permanent. So that's one big part of the bill. And then the other maybe thing to touch on here is that there's a lot of, I don't want to call them gimmicks, but just kind of political gifts, right? Like stuff that was talked about during the political season of last year with the election. Things like no tax on tips. Overtime. It's a big deal. I don't mean to minimize it, but it's just a lot of things like that, a lot of tax professionals would say, it's I guess it's cool, but it's not where you could have gotten your biggest bang, if they had looked, but it means a lot to people that hear it, right? They can understand it in a way that really means something to their pocketbooks, but there's lots of other things we could have done that accomplish the same things.
Yeah, that makes a lot of sense. Dave, you got something. What you got?
Well, I was going to kind of zero back on the tax on tips because I'm a musician as well, Colton, so I talk to a lot of bartenders, a lot of waitresses all the time, and I kind of I have one foot in that world. But that's only going to last, am I incorrect in saying that the exclusion of tips and overtime pay for taxes, that runs for 5 years? Is that correct?
Yeah, no, that's 100% correct. It's very similar to kind of what we saw with, again, the 2017 Trump tax cuts. There's an expiration to these, and the reason for that is they have to make this stuff work within, for budgeting purposes, and so they don't really have a way to pay for that yet. at least, in terms of actual penciling out.
Do they ever? Colton, wait, do they
Yeah.
ever have a way to pay for it, to be honest with you?
Justin Wilson
No.
used to laugh about the Cajuns. He used to say that he says, we used to believe in spending money just before we get it. I've never seen a hearse, or I've never seen an armored car in a funeral procession yet.
Yeah. Yeah, so they feel like they've got ways to pay for it, right? Just the kind of the Republican way of looking at the economy is they believe that through these cuts they're going to see increased tax revenues because of just the kind of the trickle down theory, and whether or not that happens or not is to be seen. And if I think the other thing too is if you look at the timing of it. It aligns in terms of needing to debate this stuff. It aligns with some of the next political cycles. And so it can then become a way to get votes from folks that's going to impact if it expires by the current administration and the Republicans being able to say, hey, we're going to make this permanent if you vote for us type thing.
Well, the other question I have, Colton, and by the way, there's no wrong answer here. I'm not looking for one. It's a genuine curiosity. So, and a lot of the tariff discussion has really kind of abated, and a lot of it has kind of come back down. But you could also make a case that a lot of the nature of these tax cuts is also meant to kind of offset some of the sticker shock that some people in small businesses are seeing. Is that part of the design, that the tax cuts are so permanent and kind of put into place to kind of offset any effects that tariffs might have on small businesses' bottom line? And by the way, the answer could be no. I'm actually asking.
Yeah, I there's probably something there. I mean, to me, the tariff issue is, yes, there's an impact. Obviously, people, they're going to see increased costs from some of that. But the bigger deal with the tariffs is just the uncertainty, right? Like as a business, if you tell me I'm going to see increased costs due to tariffs, I can price that in, and I'm just going to pass it on to my customers. But if I know what it is, I can manage around it. The problem is we don't know what it is. It's one thing, one percentage one day and another the next, and it just becomes very difficult to manage. So that's one issue. I think with this tax bill, as far as small business, yes, there is some stuff that helps. Like there's an increase. In fact, this is one of the things I had on my talking points with you today is the qualified business income deduction. A lot of folks don't really understand what that is in terms of small business owners. It's an additional deduction to your taxable income. It kind of falls in the same place on your tax return as your standard deduction. So if you're single, married, head of household, you get a deduction in the varying amounts, and then you get this qualified business income deduction as well. Well, it was anywhere from 0 to 20% based on a lot of factors. That's increased now to 23%. That's not small. I mean, that's a fairly sizable increase, and it will definitely make a difference on people's taxes. But a lot of the stuff we're seeing that's really going to help small business owners is the depreciation. That's coming back into play for our owner-operators out there. Probably the biggest impact is the 100% depreciation that you can now take. There's an increase to Section 179. It basically doubles. The bonus depreciation is what I was referencing before that. So I don't know that they're exactly tied together, but there's definitely something there.
We're going to take a quick break, Colton, because we got to. And by the way, you can tell Colton's done this show before because he took a pause right at quarter till. We're going to be back on the other side. I'll give you on the button. We're going to come back on the other side of this with a little bit of a timestamp from our friends at Truck Down, and then we're going to get up and talk to Colton Lawrence. We'll be right back. He's the Trucker CFO.
TruckerCFO.com.
I beat you there. You owe me a Coke. You owe me a Coke. Always owe me a Coke.
I have a Mexican Coke in the... Check out the new over-the-top lineup at participating Country Pride and Iron Skillet restaurants. 3 gigantic sandwiches loaded with flavor. Try the Chicken Parm Stack, the Big Country Combo, or the Ultimate Smash Melt. The Ultimate Smash Melt. 2 delicious smash burger patties, surrounded by 2 grilled cheese sandwiches. 2 sandwiches in 1. Visit your favorite Country Pride or Iron Skillet restaurant and come hungry.
Available for dine-in only at participating Country Pride and Iron Skillet restaurants inside TA or Petro Travel Centers.
The Joshua Chamberlain Society is unlike any other veterans organization. It's truly a family, and I know that firsthand from working with them myself. Their mission is to make wounded veterans and families of deceased veterans feel the support and appreciation of their community for life. Our veterans' injuries are permanent, and so is the JCS support. From monetary assistance like paying utility bills or college funds to helping our heroes find purpose, JCS is a family that surrounds and supports the heroes who have sacrificed so much. Learn more and make your donation at chamberlainsociety.org. That's chamberlainsociety.org.
Speaking of Mexican Cokes, Dave, I don't know if you're aware of the fact that the coffee shop you and I go to down the block from the Degas house, in their fridge, that's the Coke they sell. They sell those Cokes. And they are selling them currently as we speak at 8:46 in the a.m. in the center of the country. That timestamp is brought to you by Truck Down. Since '97, they've been working with companies big and small, providing roadside assistance connections that keep America's economy moving. Take a step up. Download the app, truckdown.com at 8:47. Speaking of actually working with companies big and small, giving them economic roadside assistance to keep America's economy moving, Colton Lawrence joins us this morning, a longtime friend of the show. It's good to have him back on the air. Hey, Colton, welcome back to the Dave Nemo Show.
Hey, thanks for having me again. I always enjoy it.
So
thank
let's
you so
talk.
much.
Let's talk briefly, Dave, about that bonus depreciation restored again. Let's explain to our neophytes and people who don't understand the newfangled stuff and all the kind of ins and outs what a bonus depreciation is.
All right. So for our owner-operators out there, small fleet owners, you guys, when you're looking at buying equipment, you've got a couple choices. Usually those choices are purchase and usually finance or lease the truck. And so when you lease the truck, it's pretty straightforward. You've got a truck payment. You do not depreciate the truck. Instead, you write off the price of the lease payments. And then at some point that lease expires and you either have a balloon payment to then purchase the truck, or it's a dollar purchase and then the truck becomes yours at that point in time. That's the lease option. The purchase option, again, it usually involves you financing it unless you have the cash to buy it outright. But when you do that, if you're financing it, you don't actually write off the truck payments. You write off the interest portion, and then for the principal portion, you take depreciation. And there are standard ways of taking that depreciation that spread that deduction out over time. Or alternatively, you have these accelerated depreciation options. And what that allows you to do is instead of taking, just an evenly spread amount, you are able to take up to the entire amount of the truck as a deduction against your taxable income in that year. That's a big deal. For most folks, they're able to eliminate almost all, if not a big portion, all of their income for the year by taking these accelerated depreciation options. And it's for one truck owner operators, I don't usually like to suggest they do it because although they may get a big savings in the current year that they take that accelerated depreciation, that means they're not going to have a deduction in the following years for that truck because they will have already taken it. So that being said, there's really two big options on depreciation. There's the bonus depreciation, which you had a 50% bonus depreciation option and 100%. That 100% expired, I believe, 2 years ago. Maybe it was only a year ago. Anyway, it expired. And now with this big new beautiful bill, they're bringing it back, and you have that option of the 100% depreciation. And then you have the Section 179. And honestly, for our folks, most of the time we use the Section 179. There are circumstances where we will look at the bonus depreciation in lieu of the Section 179, but it's a tool that we use all the time to help owner-operators and small fleets.
And that increases from $1.25 million to $2.5 million.
It does. The Section 179 essentially doubles, and what that means is, this is going to apply more to your small fleets, right, that are buying, multiple vehicles, upwards of 10 vehicles a year. Then they have the option of writing off all of those vehicles up to the $2.5 million point.
Got it.
Let me kind of pivot here as we kind of you made mention earlier the idea of not taking one form of deduction in order to kind of save it for subsequent years to allow yourself to keep on doing that. Are there any other traps inside of the bill? And when I say traps, you know what I'm talking about. The idea that things are really, really good in the instant and really do give you a nice little windfall, but then kind of take away long-term kind of financial planning from you. Is there anything else that people should be looking out for that looks really kind of nice and shiny and fun, but actually taking advantage of it now may lead to long-term, I guess long-term, not as good as you'd like it to be?
Not so much, and I think that's because most of those kinds of gotchas were the ones that expired, right? So they're not gonna really come back and bite you, so to speak. But the things such as the no tax on tips and the no tax on overtime. The problem with an expiration on those is you get folks that are going to live, for the next 5 years, and for the folks that are hourly and that are looking for that overtime, they're going to establish a lifestyle that depends on that money not being taxed, and that's just kind of the way most Americans live is paycheck to paycheck, and the cash comes in and the cash goes out, and so if they get used to that lifestyle of not needing to pay the tax on that money, and then all of a sudden in 5 years it expires, that's an expense that they're not going to be ready for. And that's where the gotcha comes, and that's where it becomes a political issue that, will be heavily debated at that time.
You ever notice it's always on a 5-year schedule, and they do that so that in case the next administration isn't an administration the people who passed the bill they're the ones stuck with having to make the decision about whether or not to renew it or not. You put your opponent, if you end up having an opponent win, is in the position of having to decide whether or not to pull the trigger and renew that particular thing. There's a lot of stuff going on here that we could talk about as well, too. Let's talk for a second, because we do have a lot of young drivers out there thinking about starting a family, and there are Trump accounts for newborns. So can you kind of explain that to the people out there listening?
Yeah, this is a new one, and it caught me by surprise. It was actually one of my counterparts that pointed it out to me, which I guess I should just quickly mention that. I gave you guys, 7 talking points. There is no way we could spend the next 2 weeks talking about every single thing that's in this.
We might.
I gave you 7.
We might, Colton.
Yeah.
We might. Stay by your phone, buddy.
We're
might.
Going deep. We're going deep.
Yeah. So there's no way everybody can know everything about this bill, including the people that are going to vote on it. But that being said, these Trump
do they ever? Do they ever? Sorry.
The Trump accounts. It's an interesting one. It's any child born during Trump's second administration, so just think of those dates from inauguration to inauguration, they will apparently automatically have an account set up in their name. The government will contribute up to $1,000 to that account, and that account will be invested into the stock market. And then family, friends, other people can also invest into that account for that child, up to certain amounts. I believe the total amount that can be put into it is $5,000 per year. I might be off on that amount. My computer just decided to reboot right in the middle of the call, so I don't have my notes in front of me anymore.
That's all right. You're doing great. You're doing great. It's working out.
So I believe it's up to $5,000 a year, and it's a pretty cool concept. Again, some people might call it gimmicky, to call them Trump accounts, but in any case, it is something that have taken advantage of for these newborns by the time they're 18. And with traditional increases in the stock market, they could have a sizable amount of money that they can use to start out life.
You don't have your notes in front of you, but I have your notes in front of me. So the child tax credit increase goes to $2,500 per child.
That's correct. It's been at $2,000. Some people some people got used to it being $3,000 because there was an increase during the COVID years to $3,000, again, to just kind of get people more free money. But $2,500, if depending on where you're from and how many kids you got, that $2,500 will add up.
Colton, when you said about there are a couple of ways to do leasing, and you could have a balloon payment, or you could give them $1 and you own the truck, you reminded me of the Road Gang's first trucking company sponsor. and it was called Midwestern Distribution out of Fort Scott, Kansas, where you could get a cab over Freightliner, buy it or lease it for $1 down.
Yeah, there's those there's a lot
of
of
guys remember that, man. Yeah.
Yes. Yeah, dollar down, and now the dollar buyout is a common one we see now with those leases. Although we are seeing more that'll have like $10,000, $15,000, $20,000 balloon payments that they have to then finance.
What can people do? Go ahead.
I was going to ask really quickly because I want to make sure that we were talking about those little novelty gimmicky things like the tips and all that kind of stuff, and I was wondering in regards to like not getting used to that spending lifestyle when somebody takes advantage of something like that as a financial planner, because you're more than just an accountant. You like I said, Trucker CFO. If you're talking to a business owner about this, even with the tips kind of thing, what kind of recommendations do you make with this? What to do with that kind of money? What to do with it rather than get used to it?
Listen, running your personal life should be no different than running a business. As a business, we try to be profitable, meaning we have more money left at the end of the day than we spent. And our personal lives need to be the same. And that profit, so to speak, in your personal life should be thrown into a savings account. And, that savings should be there to use in emergencies, but also to plan for retirements and do all those kinds of things. And if you're doing it that way, when you have a change such as, the overtime, tax on overtime going away, it's not going to impact you. It might impact your ability to save, but it's not going to impact your ability to pay the bills because you're not relying on that money to pay the bills. So it's basically just live within your means. It's such an easy concept, but it's one that unfortunately too many Americans, and by too many, I mean the vast majority of Americans, don't live by.
Well, our good friend Dave Dean Croak loves to say that plan your business in trucking as if you're going to be off the road for 2 months every year, and make sure that you have a fund to keep you up to, because at the end of the day, if you think about the number of times people go into shop to get serviced and all the other stuff and the vacations and the downtime, and it really seems to suggest that anytime you get this kind of windfall, you want to actually create an indemnification fund so that when you do hit bad times, you almost want to be, the ant and the grasshopper, you want to be the ant in those situations, correct?
Yeah, and it can become daunting for folks. And so I just tell them, look, just start now. Like I would my preference would be for people to have a year's worth of savings. But that becomes so daunting for some folks that it's just like, well, I'm not even going to start. Well, don't start with a year. Just start by building a week and then go to 2 weeks. And pretty soon it's just kind of that snowball effect. You'll just start building and building. And in a matter of time, you'll have that 2 months or 3 months or a year's worth of savings that you can then rely on in those emergency situations or when tax comes back on tips or overtime or whatever the case may be.
Dave, ask him the question you've been asking all morning. We're almost out of time. Ask him the question.
This is National Hamburger Day, Colton. What's your favorite hamburger chain? It goes between two. It's one called The Habit. I don't think that's nationwide, but I think it is out here in the West. And then Five Guys. I really like a Five Guys burger. Ah, okay. Ben
two.
Wilkins picked Five Guys too.
That's two.
They're number two. The 5 is 2. The number 1, I'll bet you know what the number 1 is. Go ahead.
Yeah, you know what the number 1 is. You know it's number 1.
Say it. Say the
Say
word.
it. Say it, Cole.
Golden
I don't
Arches. Golden Arches.
Really?
Yes.
Yeah, it's McDonald's.
You're a winner.
I mean,
It's kids.
That's definitely a burger.
TruckerCFO.com. TruckerCFO.com. Bye.